Good evening, ladies and gentlemen. Today is the 23rd, the Wednesday before the monthly expiry. Um, Once again, it's one of those days where market seems to go everywhere, but finally end up going nowhere types. We have random moves in either direction, which get completely negated. But in the meantime, if somebody is scalping, it might be fine. But if you're trying to trade non-directionally, it's been tricky to say the least. Today, I decided I'm going to trade the Bank Nifty instead of the Nifty because at least there is some amount of premium available in OTM strikes, because some kind of Bank Nifty obviously is considered more volatile than Nifty. The reason I generally don't trade the Bank Nifty is because I have had situations a long time in the past where I've got terrible slippage in Bank Nifty, and Bank Nifty sometimes moves much faster than you can control your position. You don't get enough reaction time. That's the case sometimes with Nifty as well, but Bank Nifty is far more frequent. Anyway, decided to do that. Was a day where we gapped up and then got sold off from there, so it didn't work out really well. So took a minor loss and an exit from there, and added a positional trade on TCS. I will see whether or not I'll trade tomorrow's expiry. With it all depends on what premium certain strikes open at, and also given that there is a Reliance AGM, and depending on what happens there can be a big move in Reliance, and if there is a move in Reliance, that might translate to a move on the entire market. So all that being the case, I will catch you tomorrow. I think today's video is more about me just getting acclimated to trading a different instrument, because I'm not as well versed with it as I am with the Nifty itself. So thank you so much for watching, and I will catch you tomorrow for the expiry trade. Take care.
Want to meet like minded traders and discuss option strategies, adjustments, and more? Just type in Discuss Nifty in your Telegram search box and join the friendly trader community.
Good morning, ladies and gentlemen. So, decided to go with a different approach, slightly different approach today, wherein so the actual volatility in the market lately has been higher than what is the implied volatility, so as to speak. And in this situation, what I'm finding that trading the Nifty is just not making sense because the premiums available are peanuts, and instead have decided to take the trading the Bank Nifty route. Now, how I've done this is I have kept 1,000 point range below what I'm expecting a support of um, 34,500, and today's sentiment is quite in the positive, and we've opened gap up. And for the call side, I have taken the 35,400 call, which is just uh, above yesterday's high, swing high, so by about 150 points. So this range gives me a decent amount of maneuverability. Now I've done this with a relatively less leverage situation where I've not hedged it, so I'm not getting any hedging benefit on this position, and that is to avoid any kind of um, big exposure. The potential stop loss that I can take on a mark to market basis is about 3 lakhs. So that's the stop loss. I'm going to start trading in the Bank Nifty going forward, and that should be the approach in this market, because at least Bank Nifty there is some premium that is assuming some kind of volatility to begin with, which is better than the assumption of lack of any volatility. So yeah, Nifty is now breaking below 15,800. So from the open, seems to be quite the sell-off. I'm going to wait for Bank Nifty to react to yesterday's close, which will be around 34,700. So if we start heading below 34,700, then I will move these calls aggressively down. So there's a reason Bank Nifty gives you higher premiums, because it is far more volatile, and so far after the gap up we have dipped and continued to dip, but not yet tested yesterday's close. And what I've had to do is roll down my call 4 times, um, 3 times rather. And but regardless, because of the kind of premium available, this kind of makes it worth it, because at least the market is factoring in volatility on Bank Nifty, so it's not too much of a headache. Right now, I'm looking at the open interest. It's not yet built up to a large extent, but There are a lot of short straddle positions building up on Nifty at 15,800 and Bank Nifty at 34,800. So, and there is, I mean, what is visible, there should be good support at 34,500, good resistance at 35,000 as well as 35,500. So, with the 400 point spread, currently I'm comfortable to just hold on to this spread as is for now. So we'll keep you posted. Time is 9:36. The idea will be slowly easing into trading Bank Nifty and then eventually probably take hedging benefit and all the other benefits in order to um, put the position on steroid once I'm comfortable managing it over a period of time. Okay, just to go over what is happening, this triangle is pretty much centered. We are seeing potentially a retest of the day's low on Bank Nifty, and but it's not leading to any put side IV spike. Initial dip led to a put side IV spike, but the second dip is not leading to much of a put side IV spike. The calendar that I took yesterday is doing quite well. The hedges are losing about 40,000, but the short strangle is making about 90,000 or so. So just basically one trade overnight. It's already returning quite a good amount. I'll most likely hold this till tomorrow morning because I'll be squaring off this anyway. So I'll keep you posted. Time is 9:48. Okay, so when you trade a different instrument, you kind of have to break into it a little bit. While the trading style remains more or less exactly the same, and the psychology, the risk management, everything else remains exactly the same. The instrument itself takes some time to get used to how does the instrument behave, how does the price of certain options at certain distances behave, and what kind of move, how do they react. Like for example, at entry, I should have known when I entered 1,000 point triangle on Wednesday morning for something like 110. I should have known if, for example, that is the right pricing in the current market or it's over, it's under. I mean, all of that you get only a feel for it when you have traded that instrument many times. So one way of people saying, okay, if you're trading a new instrument, maybe start out at minuscule size, like trade a single lot or 2 lots or 3 lots, 5 lots. In this case, I can't do that because then I won't even feel like I'm actually trading. I won't, it's never close to my exposure on intraday trade, and I won't be behaving the same way. If I'm trading 10 lots, I might be able to capture a lot more because I'll be willing to lose a lot more versus if I'm trading with larger sizing. Also, one thing, I have charts of all the banks pulled up on my other screen. So I'm taking a close. So here's another thing. I go from watching Nifty IT, Nifty Reliance Nifty, and looking at all of the components of Nifty to now looking mainly at just banks. Also looking at the other components to see what's happening in the market. Like for example, Reliance is taking quite the dip now. Good chance of a 2200 expiry, and yeah, but there's an event coming up. It could go really anywhere. Uh, right now, HDFC Bank, it kind of has, so this particular area, the 15,000 is going to be a big deal. If we break 15,000 intraday, then I will have to be very careful about the 35-200 calls, which can blow up big time if HDFC Bank makes that move. Also taking a look at all other banks, it's nothing to be concerned about in any direction as such. So we'll keep you posted. It will sort of take me some time to break into a certain level of um, complete comfort while trading a new instrument. I mean, as a trader, it shouldn't matter what you're trading. Well, you have a certain setup. If that setup works, if you're trading, especially if you're doing non-directional trading, you just need to tweak it slightly to different instruments while keeping the underlying um, aspects the same. So I'll keep you posted. Time is 10 o'clock. Finally, that initial runoff IV spike has come down, and now we are sort of sideways. Okay, we had a big dip, and then basically I took support above 34,600. But at this point, what has happened? in order to balance my puts, I had to move my calls from 35,500 to 35,400 to 35,300, 3200, 5,100, and then 5,000. So we'll be risking off on the entire position by buying back both of them and moving them 200 points below. I'll do this in thousands to avoid slippage to the extent possible. Basically what this does is this takes off, it widens my range of profitability and exposes me less to mild moves here and there. The premium available right now in the 34,200 is 62 and 35,200 is 60. It's the same concept as trading the Nifty when the credit I've taken is far too high because of how close I've moved and there's a lot of time left to go in the trading day. We'll take the risk off by moving both legs away. Yeah, is this visible here? The reason you also take off the risk on the call side is in case the dip gets bought, then the puts which are no longer going to protect you because they've been rolled down will be compensated by the fact that your call is further away than it previously was. Okay, there we go. And just like that, we have got 1,000-point strangle again. Bank Nifty is, the thing about Bank Nifty is you also have less liquidity in some of the strikes. And you can eat up the entire liquidity and have massive slippage of 50, 100. I've seen over 100 points of slippage in certain stop loss orders. So that is the real threat in Bank Nifty. Anyway, by doing this, I have moved further away. This gives me more room to work with and should be easier to manage as well. We'll keep you posted. Time is 10:27. So at one point during the up move, had to risk off the calls as well, and now that's the reversal. So anyway, so far first day of trading the Bank Nifty, not making the best moves at the best possible times. I am uh, letting myself be pushed out of the position quite easily and over adjusting almost, I think. But I guess the initial bout of adjustments were necessary given the kind of down move we made. But then into the reversal, I think I should have waited before moving up. But regardless, I don't think being down a little more than 10 points on Bank Nifty is such a big deal. 10 points on Bank Nifty is about 3 points on Nifty, is how I would equate. With this current position, the maximum that it can lose even at expiry is about under 5 lakhs. So if under 5 lakhs is the total decay possible at expiry tomorrow, then today, even if we hold range and say this loses about 1/4, that will put us in break even. But my idea is not to get to break even, because if that was the case, then I would be taking on more credit. Now, for example, without these two hedges, which I don't have, right, the margin required for the position is almost 1.3 crores. Whereas if you buy the hedges, the margin required becomes just 38 lakhs. So when you want to maximize your return on capital per point of decay captured, then hedging will give you that. Like if just buy super OTM for the purpose of hedging, and that will put your position almost at a 4x leverage type situation. So you can see I don't have these hedges. That's why I have to pay full margin, and I'm paying full margin. And my idea here is not exactly to break even or make some kind of a profit. It's more to observe behavior of Bank Nifty, its options and pricing over a period until I'm very comfortable with how I'm expecting different width spreads on Bank Nifty to react, and accordingly I will be able to trade it better post that. So of course it doesn't help when you have a gap up and there's a big cool off in IV and then there's a quick sell off leading to a rise in IV. Like this opened at 50, went up all the way to 130 at one point. So it's going to be tricky to manage that, but I think so far uh, I've been moderately comfortable in the position. So we'll keep you posted. Time is 12 o'clock, and yeah. Okay, Nifty is testing the day's low again roughly. There's some kind of sell-off in Reliance till 2200, and IT also is very weak. What I'm doing now is I'm going to take an exit from the position. Wrong strike.
Good enough price to exit. Yeah, that should more or less be it for the day. Um, Roughly the strangle together when I exited was trading at something like 78, and I don't want to bother holding on for too much longer, because if there is some kind of breakdown in Nifty, then that will percolate into Bank Nifty as well. Reliance and IT are looking quite weak. Okay, IT is absolutely tanking, and I have used this as an opportunity to sell 3200 put option on TCS. Basically, if I take delivery of TCS shares, which is the intention here, to actually take delivery of TCS shares, I'll also be managing the put, of course, if it continues to bleed. But um, my buying price will be about 3130, which is fine. I've not been able to add TCS in a while, and this is what I'm doing into the dip. I'm using the dip as an opportunity. So yeah, that's about it. There won't be any more trades for the rest of the day. I'm going to carry this Bank Nifty um, double calendar till tomorrow anyway. So for now, it is going to just remain open. I'll see towards the end of the day how it is looking. If there is some kind of a big up move, then I will exit. If there isn't, then I will hold on to the position overnight. Thank you so much for watching. Today, really not much happened. It was just one of those days where we gapped up. There was a crash in IV, and then continued to head down the whole day. The markets aren't really going anywhere, then going neither up nor down. They're just stuck in a range. But within that tight range, if you want to be non-directional, it's quite hard to trade, because the longer markets don't go anywhere, the more likely it is at some point they're going to break in some direction. And each time you want to risk manage in a non-directional trade, it's going to sort of go against you, because this is just the market where we rise and then we fall and we rise and fall, but overall if you look at it from a weekly perspective, we've not gone anywhere. So that's why I'll probably switch to doing more weekly calendars. I won't be doing one for next week because I am traveling on so I'll be traveling on Saturday, Sunday, Monday and Tuesday, so I won't be able to manage uh, as I'm traveling. And yeah, thank you so much for watching, and I will catch you tomorrow.
Thank you for watching. Please post any questions you have in the comment section. Also, do not forget to like and share the video and subscribe to the channel. To find us on Twitter, Telegram, and Facebook, use the username NiftyBN. Also, we post some of our trades to the community tab, so do not forget to check that from time to time.